All right, welcome everyone. Welcome to the Hurley Investments trade findings and adjustments for the 31st, last day of the month. In fact, since it's the last day of the month, help me understand, what do we know about the last day of the month? Since it is the last day of the month, what do we know? What do you know with it being the last day of the month? Because it's something we should be taking into consideration when we would ever think about doing a trade today, right? Ooh, I like them both. Good answers. We have window dressing and rebalancing. So usually today, or the last day of the month, you see a you see a sell side biased. In fact, anyone know why you see that sell side biased right now? Yeah, sell side biased is they're clearing out and selling off some positions with a little purchasing and more purchasing. Do some spelling here. More purchasing within the next 3 days. And why does it happen over the next 3 days? Because it's just something to think about. If you're going to be placing trades, everyone's like, oh, there's buying in on the first of the month. Well, it rarely happens the first of the month. And why does it rarely happen the first of the month? Which is why today might be a pretty good day to place some trades. I see some question marks. Why does that purchasing happen rarely on the first of the month and it comes later on? Ooh, I've got a couple different answers here, which is pretty interesting, right? New money coming in from 401ks, that is correct. So let's just put this, say, first day of the month is new money coming in. I'm going to say the second to third day of the month are cleared closed positions that happened the end of the month. It usually takes a couple days for mutual funds and bigger clearinghouses to clear these bigger end of the month closing. So usually it's new money on the first day of the month that comes in. It has a slight bias to the upside, but it's nothing major. And then the second and third day are those cleared closed positions that need 48 hours to 72 hours to clear. Boom, those positions go in. And that's why you usually see an uptick the first couple of days. We might see a little uptick tomorrow. Monday would be a bigger buy-in day for new money coming into positions that have cleared for the closing positions we had yesterday and today. Does that make sense to you guys? Understanding the market fundamentals, how that works? All right, thank you. Couple other yeses. There we go. All right, perfect. Any other questions about that? We'd like to think that positions just close overnight, right? But for the big guys, for the institutional traders, it actually takes a little while. It takes a while, and they have to clear, go through clearinghouses, have to be allocated, and things are a little different. All right, we're in a news-driven market. What is some of the news that's coming up that you should know about if you're going to trade? And part of this is in regards to what was rather important for our Monday discussion. Jeff Hall, Destin, Mary, I didn't think I saw any of you guys Monday night. If you go to www.myhurleyinvestment, singular, www.myhurleyinvestment, you can catch up on those. myhurleyinvestment.com. And you can always just click on these and you'll catch up to what we were talking about and what we were going over. So just keep that in mind. All right. News. Yes, I would agree with you. Russia still attacking some cities, but seems to be slowing down because, anyone know why it seems to be slowing down? Seems to be slowing down because, I'll give it away if you want me to, because they aren't able to resupply. They're resupplying. They kind of blew this. Logistics. I like that one. That's perfect. But yes, Russia's still attacking some cities that seem to be slowing down because of resupply. I don't know if you guys paid attention to this, but today Russia will only sell natural gas and crude using the ruble. I don't know if that's how you spell ruble correctly. Which means, right, they still, and I think it's kind of important, still are allowing the use of their banks. So I find this hilarious. Why would they be doing this? Why would they say, hey, you can only buy our crude or natural gas, especially to Europe. You can only use it and buy it through the ruble. Well, number one, right? Number one, it funds their banks with currency exchange rate fees. So 3% goes to their banks, right? For exchanging euros into rubles. Number two, strengthens the ruble, and it helps them cash hoard other currencies, right? I don't know if I'm spelling that right. But it helps them cash hoard other currencies that don't have the same inflation problem that their currencies have, right? I found that kind of interesting. Any other news that we could go through today? Well, yeah, let's use yesterday's news. I thought that was rather important too. So GDP slowed to 6.9 versus an estimated 7.1. Consumer confidence came in at 107.2 versus 107.5. And what was the big one? I had another one in here that I was where. Oh, there we go. Personal spending today. came in at 0.2 versus an estimated 0.5. So for us, right, GDP seems to be slowing down. Question, are we going to go into a recession? Are we going to go into a recession? Our personal income increased to 0.5. So I did find this kind of interesting, right? 0.5 versus an estimated 0.5. So our income's still growing. We're just saving right now. We seem to be saving a little bit, at least over the last month, right? Obviously, inflation is going through the roof, so some of us aren't interested in buying some of the things that are so highly inflated. With that said, my kids have spring break. So we're going to go spend money driving up to the mountains, and we're going to do a long weekend up in the mountains this weekend. So we're going to complain the whole way up there on how much gas is, but we're still going to try to have a good time as a family. All right, so let's relate this to Hurley Investments, right? Hurley Investments on up days has been 3 times the increase of the market. But let's go to the other side. Hurley Investments on down days has been, anyone have a guess? Anyone have a guess on how we've been doing on the down days? And this really is for the last 2 weeks. So I should make that disclaimer, right? For the last 2 weeks or so. Who wants to take a guess? There are a bunch of you here. William, you looked at your account. What do you think? So, yes, William, on Baidu's Pop, so yes, I'm going to just kind of stick that one on here. On Baidu's Pop, the market was up 0.23 and you were up 7.1%. Agreed. I probably should put it in here like this because it was probably 3 weeks. That makes sense. There you go. So on down days, we seem to be 1.5 to 2 times as bad as the decrease. Or as the drop, right? Let's just stop using big words as the drop. So yesterday we were twice as bad. You know, Monday, Tuesday, Wednesday, we were 2-3 times as good. What's the reason? What's the reason for that, though? So someone tell me, what is the reason for that in the portfolios? I need you guys to understand what we're doing in your portfolios, right? So what is the reasoning behind that? Why do you think on up days we're doing 3 times as well and on down days we're doing 2 times as well? And I'm comparing this to the S&P 500. That's what money managers are really benchmarked against. I do think that's kind of garbage, but that's the line I have to toe. Any ideas? Why is this? Where do you guys, there you go. All right, so I'm going to add to that just a little bit, right? Portfolios, and need to spell. Portfolios are, and I'm going to say based around technology, banks, and consumer discretionary, right? If you were to take a look at what we're using, and I could put consumer discretionary as retail as well. Because we use options to protect on the downside, option as insurance. All right, so portfolios have been based around technology because primarily the NASDAQ has outperformed the S&P over the last decade. So we're weighted our portfolios, at least half of our positions are in technology. If you're to talk about what are those positions, right? Those technology positions, Apple, Baidu, Facebook, Micron. Those would be core holdings, right, that are overweighting portfolios into technologies. If we're going to go to banks, right, our banks are Bank of America, they are JP Morgan, they are Zions Bank, they are Visa, they are Square. And really, I should call it financials instead of banks. So I should also put that little discrepancy in here. Financials, right? If we're going to consumer discretionary, our consumer discretionary, where would consumers spend money? That kind of hits Apple again. It hits Disney. It hits Under Armour. I would even go so far as to say it hits Ford, right? If I was looking at those positions, that's where I would justify where we have our money in right now. And still looking through things here. And I'm seeing a couple things come in. So yes, I would also put Verizon in there. And then last but not least, technology is, I could just say others, right? We have Boeing in there for an opportunity to bounce higher. So we do have Boeing in there. We do have a little bit of Coke, little Lockheed Martin, a little bit of CVS is still in here. We've got a couple with some Dollar General leaps. Probably time to cash those out and take a little profit there and push that out in time. What else could I tell you that we're looking at that some of the other positions? Ooh, we got a little bit of silver, Under Armour, US Bank Corp, Visa, Verizon. So yeah, I mean that's primarily where we're at. We're primarily sitting right here where, you know, a couple others that are just interesting, Coke, Lockheed Martin, CVS, Dollar General, US Bank Corp is one for a couple of you, Purple, couple of you have purple in there. Micron is one that's kind of in there now. They're just, the short answer is we're a little bit NASDAQ leveraged financials, and pretty interesting, we are not holding energy, healthcare, or biopharma. We just don't see it. We just don't see it. Yes, I'll stick that in there. A couple have Newmont for materials or have had it in the past. I agree. But portfolio construction for Hurley Investments isn't a pray and spray kind of garbage. We're honed in on what we think is going to do the best for this year. And that's where we're really taking a look. All right. Baidu, I know some of you are like, oh my gosh, Kevin. Baidu lost 2.2% market. It's down even more than that. And a couple of you asked, you know, Kevin, just, we did so good on the way down. We made more than penny for penny. And the question that came to me is, how are we going to make more than penny for penny on the way down? So Destin and Jeff, you're kind of new, but came from the education. Mary, I know you've taken other education, not from Safe Option Strategies, but from the guys over at, well, what? They're probably called Spread Trade System, maybe Options Animal now. What are we going to do so that we make up, and I'm just going to kind of highlight, we're basically down today. When I took this 157, right? And we're at 125. So we basically are making up everything, but we're missing 32,000 on the way down. So we're making up about 80% on the way down. And the question I received from a couple people, hey, you're profitable for the year, you're doing good for the year, you guys have added shares for the year. How cool is that? We get to add shares to accounts, dollar cost averaging without asking you to go put more money in your account. What are we going to do you think, to make up more on the way down? And it's rather important because let's look at a chart. Let's look at a chart on Baidu right now. If we're to look at a chart, where's Baidu's next stop on the way down? We'll update this. You guys tell me, where's Baidu's next stop on the way down? Kind of scary here, right? But give it to me. Where's Baidu's next stop? You guys, well, Kevin, your chart's small enough as it is. Where's Baidu's next stop on the way down? There are a couple different answers. So yes, you could be looking at the lows. Kevin, 102.18. So technically speaking, yes, the next stop on the way down could be 102.18. Kevin, I like it. You see a couple 132s in there. So if you hit 132 today, you could call it a triple bottom. Both of those could be right. I think that's rather impressive. So Mary, I'm going to call you out. Rather impressive. Good job using your level 1 technical analysis. But, and I'm not saying either one of those can't be the number, but I see something different. Where do you think the first stop on the way down could be? And Jeff and Destin, go ahead and answer in here. Cole, are answering if you want to. David, go ahead. So, okay. So I just saw 125, right? You're like, hey, right here, a low 2 weeks ago was 125, and then it shot up from there to get above the 50-day. Possibly. Jeff says 102, then 82. So Jeff's looking at a little bit farther out in time. I like those answers. But my guess would be right here, the 118.99, right where it stopped on that S1 pivot point support level. And there's roughly a reason behind it. If you were to take 158 from the highs and run it down to 118, let's do that math really quickly. Let me pull up a calculator here. We're going to take 158.63 minus 118. I can't type. 158.63 minus 118.99. We come up with a number of $39.64. So we have a $39.64 drop. If we take that 369.64 and divide it by 158.63, we come up to a 24.98, or we come up to a 25% drop. Now, if you study Fibonacci's and so forth, you kind of go from an 8 to a 16 to between a 24 and a 26. Could be a Elliott wave, third wave. It could be a Fibonacci retracement. But you're basically at that 25% drop. And that's where you could see that, hey, here we go. I definitely could see 102. Because that puts it at that 33.8% Fibonacci Elliott wave. And all it is just herd mentality. It's just herd mentality. I would suspect we're going to go and test 118.99. That would be my expectation of where that stock's going to go. So, anyone remember what we did last time? Where we were making up more on the way down? So, yes. They're processing. It may take some time to get in there, but we are processing 30 extra orders on this. You'll notice we only have 154. We have 5 more that are at a different strike price than the 155 because we just added some. But yes, we're adding a couple extra contracts to positions. That way we'll make more on the way down than the stock will lose. So if you had, I don't know, let's say 300 to 900 shares, we added another long put contract. If you had, I don't know, let's do 1,000 to 1,700 shares, we added 2 contracts. And then if you had 1,800 to, I think this group, the most is 2,600 shares, we added 4 contracts. So that way we have a position that you won't see. It's unallocated. You won't see it till the end of the day or tomorrow. We added positions to make up more on the way down than the stock is losing. That will also mean we won't make up as much on the way down. But when we have a stock trading at $33, it can lose all the way down to $119. Oh, that's let's face it, that's another $15 to the downside. We want to make that up. So our trade today is adding, sprinkling, putting a couple more in so that we have, and or we make up that difference. Instead of making up 80% on the way down, we want to make up 100% on the way down, if not more, just like we did last time. So that's our trade today, is we're just sprinkling or adding those extra contracts to make up dollar for dollar, penny for penny on the way down. We're also looking at closing. Closing Costco out again. So just remember, we closed 450, 500, 550, and some 600 leaps out for profits over the life of our Costco trades. And basically, right around, I'm probably going to say 593 to 600, we are going to close the current Costco leap position down again. And yes, as you guys are correct, and we will probably start another single contract leap call position for the next earnings around, I think it's 5/26 estimated date. So it's about time. Cost basis on these was right around $20.50 because we dollar cost averaged them once. We're basically looking at 100% return. So we feel it's time to cash them out and look to re-put that position in through the next earnings coming up May. And yes, good question. So why are we choosing that range? Just take a look. Yeah. That also goes to show it definitely can get back down to that 102, right? Lower trend line. Costco, the reason why we're choosing that price range to get out, which we're relatively close at right now, we need to see it better. Let's go to Costco. Come on. Let's go to Costco and let's pull it out 2 years. And that'll kind of give you a better idea. Nope, we don't have it. Round number, and in all honesty, we're going back to the 500 range. It just seemed to get up there and stop. So Short answer, round number 600. It seems like it'll stop. It might do a little bit of a pullback because it just had a run from 460 up to 600. Again, that's that Elliott wave. 140 divided by 460 puts it right in that 33% range. And it's just an Elliott wave retracement. It's just herd mentality. So yes, that's why we'd be looking to cash those out and get in for the next earnings. All right, any questions? Any questions? We probably do a leap out to, good question. So we would probably leap out to 2024. Which, yes, means it's going to be expensive. One contract's going to be, $4,600. But man, we've really enjoyed these. We've run on Costco for all last year. In fact, last year it was our most profitable. It was our most profitable spread trade or trade in options, other than protection on the way down. Impact of Under Armour going into shoes. There is no impact. They've been into shoes for 10 years now. So there is no impact. The impact of Lululemon now going into shoes will probably slow them down because they've got to come up with quality shoes. They have to make brands. All the infrastructure to start to do shoes was for a short answer, it's not cost effective when you start up. You're putting a lot into it. But the good news is for Under Armour, they're fabulous. I use their hiking boots. No impact for Under Armour going into shoes. It already happened 18, 20 years ago. They're good to go. Disney stand on gender neutrality. Well, they're kind of messed up and they're taking some heat in Florida. But yes, for the first time ever, the U.S. is now putting on passports a male gender, a female gender, and an X gender for other. Personally, I think it's kind of ridiculous. Geez, let's face it. They're men, they're women. There's some men that pretend to be women. There's some women that pretend to be men. Genetically, a man is a man, a woman's a woman. I think Disney is only hurting their conservative base. But it's kind of scary that you might have to start looking at what's being presented in cartoons and certain Disney movies. If you now have, boys kissing boys, girls kissing girls, a unique character is what I'm going to say, which will probably hurt Disney in the long run. With that said, Disney was talked about yesterday over and over and over again. Super cheap. And the comment was, well, what about all the money they got to spend on movies? Well, they've always spent a lot of money. They're not increasing their movie cost. They're just making more movies that are $1 billion movie, a $2 billion movie. I mean, it's the money that these guys are generating off of movies is absolutely outrageous. So I'm just going to make the comment. You don't have to like the company to be able to make money on them. I think COVID has hurt their numbers worse than the political gender garbage that they jumped into. They should have just shut their mouths and they should have just been a company. But leave it to a CEO or a CFO or a board to poke their nose into politics. They shouldn't. They should be a company. As of right now, I'm not worried about Disney, but I will tell you, I don't like them very much. And they are going to be one that if we get up to a full market value, we'll be exiting our Disney position. Let me know if that answers your question there. Are there any other questions? All right. So why do I like Under Armour? Again, fundamentally, I like Under Armour because of what they produce, what they make, but in real life, Under Armour is a great product. They also screwed up with their PR because if you're going to stop taking professional athletes to strip clubs and trying to expense it on the company, that might not go over well with your conservative base. But the reason why I like Under Armour comes down to our chart that literally they lost almost 50%, half of their value, 27.27 down to $13.70. They were just breaking before today the 50-day simple moving average, and I really like them from here at least up to the $20.93 level, which is their 200-day simple moving average. And it would not surprise me to see Under Armour regains their highs around $27.27. That would mean they have roughly a $10 upside from where they're at right now, or a 66% upside from here. So that's why I'm in Under Armour. Good product, good company, good profitability, and they were there not too long ago. Again, I think they are also a result of COVID, a result of a pretty poor PR firm. Any other questions that you guys have? If not, I'm going to thank you for being here today. My pleasure to spend some time with you. And I'm trying to delay to see if any other questions come in. So, okay, good question. So William just asked, why are you choosing Under Armour over Lululemon and Nike? So plain and simple, if we're going to look at a chart for the last year, we've got, and let's do the exact math. We've got $10 of upside divided by 17. We've got a 58.82% upside, right? Lululemon, expensive. They're going into shoes. They're at $372 to get to $485, about $100. They've got, a 20% upside. I'd rather go to something that has a 58.82% upside, and they're cheaper. When it comes to Nike 136 up to 178. Let's do 178 minus 136 is equal to 42 divided by 178. It only has a 23.5% upside. So between Nike, Lululemon, Nike can regain 23.59% of its upside up to the 178.37 range. Lululemon has a 20% upside, but they're expensive at $374 a share up to $485. Or you have a cheaper stock like Under Armour at $17 that has a 58.82% to the upside. So the reason why I choose between those three, William, there's more upside in Under Armour, and it will take less, 1,000 shares or more will take a lot less of your portfolio up than a Lululemon or Nike would. And again, Under Armour can get back up to 42 or their highs. So it really has to its all-time highs. These are it for Lululemon and Nike, but the all-time highs for Under Armour, it can do a triple. Well, I guess a double, 2.5, 2.4. So more upside opportunity or potential through Under Armour, just using the numbers. All right, guys. Hey, have a great day. Pleasure being with you. We'll get this posted sometime later, and you guys enjoy your weekend. I'll talk to you on Monday. Bye-bye.